Well, Tractor Supply made a name for itself during the pandemic as people migrated out of cities, and many of them started little gardens, they got new kinds of pets, and they went to Tractor Supply. Since then, we have seen the growth of the company be a little bit more choppy, as has been the stock. But let's talk about what's ahead for Tractor Supply. We've got the CEO here, Hal Lawton, with us here in the studio. Hal, thanks for being here.
Thanks for having me on.
So, as I said, you guys saw sort of that big pandemic boost, and now you're in sort of a normalization phase, it seems like. Last quarter in particular, I know that you saw some weakness in big ticket purchases on the part of your customers. I'm curious what you're seeing now. Give us a sort of read on your customers and their spending trends at the moment.
Yeah, I'd start by, if I look back over the last 5 years, to your point, we've basically doubled the size of our business. I think different than a lot of retailers, we've not given back any of those gains that we've had over the last 5 years. And also our growth was really almost 50-50 balance between ticket and also transactions. Over the last 18 months, as you said, we've kind of been a bit more stable. Our ticket has really been what's been under pressure, with our transactions, the footsteps in our stores continuing to still be strong. And that's really because the goods that we sell have been kind of normal in pricing, or even a little bit deflated, kind of counter to what's going on in the rest of the United States, where we've had a lot of inflation in the country, which has really been service driven, as we all know, with things like rent and insurance and hospitality costs and those sorts of things. But actually goods over the last 18 months have been flat to actually down,
and particularly
in pricing.
Feed, which is a big part of what you
exactly
sell.
Feed and food. If you look at Q1, two things on the ticket were really the drivers of our business that quarter, but also are the ones that are giving us kind of optimism as we look ahead. The first would be on our core commodities and kind of the deflation that was lingering still in Q1. We've talked about, as we get into Q2 and exit Q2, that we see that switching to inflation after having cycled 18, 24 months of kind of lower commodity prices. And we still feel we're still seeing that in the business, and that's still very much on track. To your point on big ticket, we struggled a bit with big ticket in March in particular because it was a delayed spring, and that's really when, like, riding lawnmowers and recreational vehicles and trailers, all of which are big businesses for us. We're the largest seller in the United States on all three of those goods. It was a softer start there, and then that continued into April, again, because it was a cooler, wetter start to spring. But when the sun's out, those businesses have been strong. It was a nice May. So far, it's shaping up, early in June, but we're a week and a half into our fiscal June, and it's been a nice sunny early of June as well. And the moisture that's been in the ground over the last 6-8 weeks continues to help drive those big ticket sales as well. So seeing a bit of a normalization as we would have expected here in the second quarter, and what we talked about is our expectation on our earnings call. More broadly, the consumer, I think consumer continues to be stable and strong. I don't think the consumer's much different than it was a year or even 2 years ago. Still cautious in times, but also kind of tapping into pent-up savings, tap into their HELOCs. Wages continue to be strong and outpacing inflation. And so, I think consumers, while they continue to show kind of their wariness and kind of their surveys, I think their actual spending continues to remain pretty stable.
What about tariffs? What's your exposure there? How are you navigating that? Are you eating that? Are you passing that along? Some combination of the two?
First off, I'd say our exposure to tariff is less than the vast majority of retail. It's not a existential issue for us, like it might be, particularly if you're on the soft line side and have a majority of your goods are purchased outside the United States. Over 60% of our goods are produced or manufactured in the United States. You think about things like animal feed and dog food, bird seed, those sorts of things, those core consumables that are our staples, right? Kind of our grocery store equivalent. And those don't have significant tariff exposure. Our tariff exposure is really more on the hard lines and soft line side of our business. We estimate around 20% of our goods, both direct imported plus through our vendor providers, comes from China, and about another 20% from outside of China. But we just dusted off our playbook from the 2018-19 perspective. We just you go through a series of actions. You first negotiate with the manufacturers you have to try to offset some of the costs that might come along with tariffs. You'll look to diversify alternative sources. You'll also re-engineer your product. You'll of course look at pricing at times too, and you kind of of pull out all those sorts of toolkits and navigate through it. And of course, we just kind of follow along with the news that's evolving on a daily basis, and are navigating our business accordingly. But again, not an existential issue for Tractor Supply, and one the team's doing a nice job of navigating.
Where are you in the toolkit on the pricing piece of it? Have you been raising prices, not on things like you mentioned that are made in the U.S., but those imported items, or have you gotten to that point yet? And when do you think, timeline-wise, or time range, you think you would get there?
I'd start with, we approach our business in a portfolio strategy, and we'll look across our business to find ways to offset any pressures that come as it relates to tariffs. On pricing, we have seen some modest moves in the marketplace. I would say starting with the map-based products. These are products where our manufacturers have suggested retail pricing out there. They kind of dictate that pricing. Many of those manufacturers are already on their second map update. And in those categories, pricing has moved really across the board and across the industry. And I think those are the ones that have moved so far. I think on the import side, you've not yet seen that flow through, the direct import side. And certainly where folks are going to see a lot of the inflation is going to be on the seasonal programs that come in the back half of the year, things like Halloween, Christmas, and others. That's where I think we'll see a significant amount of tariff inflation flow through.
Mm-hmm. Hal, talk to me about the competitive landscape, what you see and how it's evolving. Because I was talking to an analyst who covers you all this morning. He was emphasizing how he said Amazon and Lowe's, he mentioned how they're kind of moving harder into those rural areas.
Yeah, to start with, we don't have a direct national head-to-head competitor, and so oftentimes I think folks are looking to try to size us up versus someone. If you think about Walmart, Target, back in the day, Best Buy, Circuit City, Home Depot, Lowe's, kind of pick your section of retail. We don't have one of those direct head-to-heads. We compete against, tens of thousands of different retail locations, like we were talking about before coming on, like the Agways of the world and the local co-ops of the world, but also against the pet specialty stores, certainly against mass merchandise and against home improvement. I've been at the company now nearly 6 years. I'd say over my 6 years, there's been more than a handful of companies that each have made more than one announcement about activities strategies they're pursuing in rural America. And, for us, we just continue to focus on our business. We've been around for 87 years. We're looking to build a business for the next 87 and just execute our strategy and stay focused on Tractor Supply. And, we continue to take share in the market and, continue to grow our business in spite of some of these announcements that others have made.
Hal, something else you all made headlines for, and this was almost 1 year ago now, you all kind of rolled back on some of your corporate diversity efforts. This was following, at least in part, some social media pressure on the company. And I'm just curious, how you think about how you approach those issues now, issues that, on the face of it, in some cases, seem to be moral or even business best practice issues that have turned into more politically divisive issues. Are you sort of more careful about how you wade into those things? What are some of the lessons you learned?
I'd start, again, as I said earlier, about our age. We're an 87-year-old business. Our mission and values and our culture are sacrosanct to Tractor Supply, and I would put our culture against any company in America. We live and breathe our mission and values. We talk about them daily. We kind of live up to our culture. When we went through our moment last year, our goal was exactly as you said. We wanted to remove ourselves from any sort of discourse that people viewed to be political or social in its orientation. We wanted to remove ourselves from that. There were some of those perspectives that we're picking sides. That was not the case at all. We were actually wanted to remove ourselves from the conversation. And we really haven't engaged in the discussions since then on this topic. At the end of the day, I think actuals are what really matter. And if you look last year in our business, we had our lowest turnover ever in our frontline team members, and we had our highest customer satisfaction scores ever. So for Tractor, it was all about just maintaining our focus on the stakeholders inside of our business that matter the most, making sure everyone knows that we're a respectful place that people can shop and work, and make sure that we're the same Tractor they knew 5 years ago and 10 years ago and that they knew last week. And again, it was all about just removing ourselves from that divisiveness and that where people had perceptions that companies were taking political and social agendas and taking perspectives on that. And we want to do business with all customers, and we're not looking to take sides.
Would you still say, in terms of hiring, that diversity is something that's important to the company in terms of the complexion of your workforce, both in the stores and in the executive suite?
Absolutely. We embrace the topic of diversity. As we know, whether it's diversity in background, whether it's diversity in ethnicity, it makes a business better when you have all sorts of points of views inside the business. And what we really did was just remove our external metrics as it related to that topic. But internally, we continue to be respectful of all of individuals and continue to embrace the notion of diversity inside of our business. And if you look at our metrics, we had internally, we had improvements in all those areas last year.
I want to sneak in one much less controversial question to you, and that's about baby chickens.
Yes.
I think that's something everybody can agree on. You guys have these Chick Days promotions where you're selling baby chicks. We've talked about eggs a lot. Everybody's talking about eggs a lot in terms of the price. What have you guys seen in terms of demand for those chicks, this year compared to last year, the last few years because of that?
Yeah, I'd start by just saying more broadly on it, chickens are really becoming the third pet in the backyard. Nearly 1 in 5 of our customers, and we have 40-ish million customers, nearly 1 in 5 of our customers raises chickens now. And that's been growing over the last handful of years. And we, as you know, we sell live birds in our stores. We've got a huge poultry department in our stores. We sell chicken coops. We sell all things you need to raise chickens and care for your chickens. This year has been another record year for us. We'll sell a record number of live birds. We'll sell a record number of poultry feed. We'll sell a record number of coops. It is a big year as well. I think part of it's just the overall wave that's occurring in that category and in that animal species. And then some of it was also driven by the concern of egg prices and folks just kind of getting into the category. But even as egg prices have come down, we've not seen any slowing down in the category and in the business.
Chickens are the third pet.
Yeah,
Who
absolutely.
knew? Hal, thank you so much.
Thank you so
really
much for having me
appreciate
on.
it. Thanks for coming in.